seems like day before is history. Looking at the screen yesterday, what a comeback. I mean, definitely not made up for all of day before's your losses. But yeah, we're up 0.6% on a weekly expiry basis.
So Asha, this week nobody will forget in a hurry.
Yeah.
And the reason why nobody will forget in a hurry is because the real temperament of the market, in a sense, this week took a hit. Mid-cap stocks were on the butcher block. Small-cap stocks got really punctured. So this week, in a sense, while we may look at Thursday's price action and we may feel excited about it, I guess for the market per se, the collateral damage in terms of mood and the price damage has been done. Was this week's price action completely unexpected? No. Was it anticipated? Yes. Did anybody understand that the quantum of the fall would be that large and that amplified? Of course not. That's typically how bull market corrections come in. When they come in, they shake you, they shock you, and that is what has happened in the entire mid-cap space today. As we walk into trade this morning, you don't have a very poor handover. While dollar index at 1.3, yields are under control. So I would say in terms of the global setup, in terms of the overnight news flow, in terms of the market momentum, in terms of the fine print, I guess even if markets chug along and we rest for next couple of days, I think that is something which would be a relief and that would be considered as a very bullish sign.
Yeah, absolutely. The handover this morning, unfortunately, wouldn't really keep us in good stead if we do choose to follow the global markets, because the stock futures are just about little change right now. The US equity futures is what I'm talking about. Strong inflation data, which has clearly spooked investors. And even the handover was a little bit on the weaker side. A very tempered move across US equity markets overnight. And that's pretty much the picture across Asia as well. You are seeing some deep gashes for markets like Korea, Australia, Hong Kong as well, which is now lower in excess of 1.5%, and that equates to almost about a 300-point fall. But that said, the good thing is that the BSE recovered almost 9 lakh crore rupees worth in market cap yesterday. You had the India VIX as well, which saw a dip of about almost 6% coming in. It's up the 14 print, so that is a little bit better than what we saw in Tuesday's trading session. So we're about 1% off the recent lows for the Nifty. For the mid and the small cap indexes, of course, it's a bigger comeback. The small cap index is 5% off its recent low and a 3.5% recovery coming in for the mid cap index as well. But just looking at the kind of stocks that did recover the most: BLS International, RITES, Hindustan Copper, Central Bank, and I'm just talking about the nature of the broader market recovery right now.
See, you'd fallen, and across the board, small cap stocks had fallen at least 20 to 30%. From that kind of an excruciating fall, you will see a pop-up. So the pop-up yesterday, I think, was very, very universal. Everything that had fallen came back with speed up. That's how if you just drop something, it will always bounce back after it hits the floor. So yesterday's price action, in a sense, was an oversold market, oversold small and mid-cap stocks, they bounce back. But I see going forward, there would be differentiation. And there would be differentiation. Why? Because now HNI money and now high-risk money will only move back to companies where there is extreme visibility or there is value. I don't think the word value can be universally used now, and the whole function of business visibility for next 2 or 3 quarters is going to be only in select few. So while I think that 60 to 70% of the correction in small and mid-cap stocks is over, the bull market is still intact. What may happen is that the road to recovery in some of the mid and small cap stocks, I think, would be very, very differentiated. I think the winners really would be from the manufacturing and from the capital goods space. I expect that PSUs could underperform in the near term, given that A, prices are expensive, and B, I'm sure markets would view the OMC price cut as something which is more like a political move, and that could have a rub-off effect per se. So I think capital goods stocks will outperform, manufacturing stocks will outperform, but you should be now prepared for what could be called as a very differentiated move in mid-cap stocks. Large cap stocks, there is no problem. Imagine, you went on a holiday and you just come back and you look at your rates and you said, okay, first let me look at the Nifty. You said, wow, Look at the small cap index, you would say, oh my God. So really depending on how you're looking at the market.
Yeah, absolutely. A very different temperament when it comes to what's happening within the broader markets and, of course, large caps. But speaking about OMCs, the fuel price slash, and here's to put it into numbers and the math behind it. For every half a liter, half a rupee per liter change, the kind of EBITDA impact that you're likely to see on most of these OMCs. So for IOCL, it's a 7% move. For BPCL, 8%. For HPCL, 11%. And this I'm talking about per every 50 paisa move per liter on OMCs. That's the kind of EBITDA impact that you're likely to see. For OMCs, fuel, LPG, remember, it accounts for less than 75% of their sales volumes. So I think this is going to be a sensitive sector in that point of view.
So, it's a glass half full, glass half empty, depending on whom you're really asking. I mean, if you look at the price cut, it's really token in nature. But the price cut has come at a time when oil or underlying crude prices are at $85. So while this will impact this quarter's profitability, and you would imagine that once the code of conduct kicks in, which will be very soon, once election dates are announced, when the code of conduct would be kicking in, you pretty much know that no more populist measures would be taken. So is this price cut which is manageable? The answer to that is absolutely yes, because oil marketing companies have enjoyed great spreads in last 2 or 3 quarters. The trick is that, is this going to be a cap also in the run up to the election, and what if crude prices go higher? What if internationally there is a trouble and there's a spike in oil? Will the spirit of complete oil price hike, will that get challenged? Now, if that gets challenged in the near term, I think there is going to be a bit of an underperformance for oil marketing stocks. I think on a big decline, if you buy into oil marketing stocks, buying into oil marketing stocks may be a good strategy because they are not very expensive, and B, looking at the way how the government action has been, they've been far more responsible, and apart from a token cut on LPG or maybe a token cut on oil marketing companies, we've not seen any kind of a populist measure. We know that election date would be announced very soon. It could be this week, it could be early next week. And before the code of conduct kicks in, we've not seen any large mass populist measures which are coming out. So my sense is that this is a token cut. If stocks they fall, you should buy them because the structural trend I think is very strong, and B, valuations I think are very reasonable. I mean, this is one only PSU space apart from some banks where I could say that there is value there. For everything else, I think the word value is missing.
Yeah, and perhaps select private banks as well. But 197, they've got that NPCI approval for Paytm Payments Bank.
So let's put it, to put things into context, this means that the UPI business will continue. You can continue to use
Paytm account.
For UPI transaction.
Yeah.
That does not mean that the Paytm wallet problem has got solved. Now the problem is the Paytm wallet. That's where you've not got anything from Reserve Bank of India so far. And post 15th, which is from today, you will not be able to deposit money in the Paytm wallet. However, the transaction will continue and the UPI business will continue. Now UPI business in a sense is not the mainstay for Paytm. I mean, it's a business which has given them brand and it has given them reach and it has given them customer acquisition, but the spreads are so thin that this is not like the main profitable business for them. So if you're looking at buying into Paytm stock simply thinking that, okay, what does this mean? Have they come on the right side of the regulator? No, sir. They have not come on the right side of the regulator. That house fixing still needs to be done. This is more like a routine expected approval from NCPI where the banking operations will continue. What it means for you and me, well, Paytm Karo, which is the UPI service, that will also continue.
In fact, here's the